Kia ora everybody, Chris Farhi here from the Bayleys Insights team. So next month Auckland Council will be releasing their updated rating valuations for the Auckland region, so this is the CVs. So in this video I'll be briefly commenting about what we're expecting. Now the first thing to know about the rating valuations is that they are assessing the most likely selling price for the property if it had sold on 1 June 2021. Now jumping back in time, the rating valuations were updated in 2011, 2014 and most recently in 2017 with an effective date of 1 July 2017. Looking between July 2017 and June 2021, house prices grew on average about 30%. At first glance, the updated valuations will likely track at a similar rate, with the council indicating that the average CV will increase by about 32%. In the lead up to this video, we pulled the sales data for the Auckland region for 2011, 2014 and 2017, and on initial review we didn't see anything glaringly obvious in terms of impacts on the market from the revaluations being released. And that was despite the house prices growing between 30 and 40% in each of those revaluations. Now in terms of our own working theories for what might happen to the market, we have 4 theories. Our first theory is that there will be minimal impact, and the reason for that is that CVs have become less important in the market over the last couple of years, particularly as there's been a lot more online tools and media coverage about house prices in general. Our second theory is that the updated CVs might help to smooth some sales processes, but in a very subtle way. And so between June 2021, when the rating valuations will be dated, and even the current point in time, we've already seen about 10% growth in prices across the Auckland market. And so this means that for parties that are selling or getting appraisal on a property, it'll tend to be a little bit higher than the CV just due to the passage of time. And so we feel that this might give a subtle nod to people that pricing is okay when they get an offer or an appraisal. Our third theory is that the updated valuations might result in some properties being delayed and coming to the market for sale. And so for some vendors, rating valuations are an important aspect for them, and they believe that if they can get a higher rating valuation, that they'll then get a higher price for their property. Whether or not this is true aside, what it can mean is that some parties will take time to object to the valuation process and seek a higher valuation before they then put their property on the market. So this could delay some properties from being listed. Our fourth theory is the updated valuations might prompt some, what we'd loosely describe as high value, low income properties to hit the market for sale. And so the mechanism that we see here is not so much the CVs themselves, but the CV's impact on rates. With the rating valuations, although council won't change its overall rates take off the back of values generally going up or down, what will happen is that for individual properties, if they go up at a much higher rate than other properties, then they'll get charged relatively more rates. And so what we've seen over the last couple of years is that there's been a very steep rise in the value of properties with large land holdings. So that could include houses on very large parcels of land or things like future urban land holdings. And as a result, the rates on those properties could have a pretty substantial jump relative to everyone else. So if you combine a property that's had a very substantial increase in rates with perhaps a homeowner with low disposable income or a property that generally has a low level of income coming off it relative to its value, it might prompt the homeowners to then make a decision about selling in order to make a better return elsewhere. So look, overall in conclusion, we think there will be minimal impact from the rating valuations, although it is possible that a couple of subsectors might be subtly impacted. With that said, when you get your updated CV, if you do want to have it cross-checked with an appraisal, then feel totally welcome to reach out to your local Bayleys office, who'd be more than happy to help.